Hello Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. Well, it's the 14th of December. We're halfway through the month, and it's exactly what we thought it would be. Very volatile and unforgiving. One thing that stands out to me very strongly today is the action that we saw, first of all, on Friday and followed through today. And it is a classic sort of double top. You can see that right here. We call that Twin Mountain or Twin Peaks. And this is the pivot point right here. So it moved below 7,200 right here. You can take from this level to, I would say, approximately maybe a midpoint here. So we will go 1, 2, 3, 3.5. So if you can just count from here to here, it's about 3.5 big lines, these lines here, okay? So 3.5 down, 1, 2, 3.5. We would be looking at the 16, I think the 16.5 level on the Dow. We're below the 50 line. Our trade triangles, you have a red weekly trade triangle, which we've had for some time at 17,238.89, indicating that the trend, interim trend, is down. Closed below 17,200, very negative in our opinion. That's happened already with the S&P 500. Count from here up to the highs. It's pretty simple here. 1, 2, 3, 4. So we take 1, 2, 3, 4 down to here. So we're looking at the 1940 level. So let's see how that's on the S&P 500. Again, let's go to the NASDAQ. Again, we have all of our weeklies negative on this market. NASDAQ's holding up barely. If we close below 4,900, that'll be another negative sign indicating a push down. We can do the same math. It's pretty simple. You just count lows are here, and you go to the highs, which let's say we'll call it here. So we say 1, 2, 3, 4, 5 boxes. 1, 2, 3, 4, 5 boxes. And you're talking at 4,650 as a potential target zone on the downside. Below the level on the RSI, the 50 level, not a good sign. We kicked in with a trade triangle today. You can see the weekly trade triangle saying get out of this market if you're long. Gold sort of flattening out. You can see this sort of box that's beginning to form. We've talked about this before, the fact that we've got some resistance, of course, around the 1,090. In fact, our level on gold this week, I think, is 1,089. If we go over that level, you want to be long this market. It looks barely trying to get over the 50 line, so watch that very, very carefully. We've talked a lot about the market vectors, gold miners ETF, the symbol GDX. That's turned up on the weekly. Watch the gold spot, because if it goes over that 1,089 level, this is going to start to go up. The formation I'm seeing here is the fact that we built a base, and you can see the base right here. We had 1, 2, 1, 2. We got up to here. It should have got to 15, got close to it. I think 1489 was around the level, and I think now we're sort of just building another base. But support should be coming in right around the 14 level on this market. Here's the euro dollar. We talked about the euro, and they're doing very well, and it's going to continue to go higher in our opinion. Crude oil, very interesting action in the crude oil market today. We have a doji line, which is often a signal of a turn. You can see that happened right here, and it's happening right here. So let's watch that very, very carefully. Don't want to pick a bottom here, because I think it still can go lower, possibly down to the $30 level. So let's stay alert on this market. This is GLD, Spider Gold Shares, the most popular ETF, and you can see this is beginning to build a base, and we not quite over the 50 level. Our trade triangles are still negative, so no need to jump in right now, but this could be the big rotation in 2016. People move into gold, which has had a 4-year bear market, almost a 5-year bear market, and move out of equities. Let's see how that works out. Looking at Apple. Apple, something is wrong here with Apple, because we're below the 50 line. It's coming up to the peak selling season in the Christmas period. And I would say if we go below, let's say this 111 area, which we actually are right now, that is not a good sign. Tim Cook is not the magic of Steve Jobs. Facebook is beginning to look a little bit heavy. We're below the 50 line. You can see this there was a low close on Friday. It looks as though it could come down a little bit further. I would use the Fibonacci tool here and just measure where potentially it could go on the downside, and you'd be looking somewhere around the 95 level, 96 level on the downside in this particular stock. Facebook. Under Armour hasn't done that well for the year. It is, however, higher for the year. You can see we started out right around the 65 level, but we could end up right around the 65 level for the year, which would be disappointing. You can see we've been low the 50 line starting right here. That was on about October 13th, and it's continued to be below the 50 line. Not a good sign for Kevin Plank in Baltimore. So there's all the trade triangles negative. Now here's a big one, Walt Disney in a negative trend. Our trade triangles are all negative on Walt Disney. You can see we're below the 50 line. It looks like it can continually go lower. You can see the trend line that it broke. If you just draw a very simple trend line right here, 1, 2, 3 points, boom, it's broken in. I think we can see this market come under further pressure. Last market, Amazon. You can see the trend is up. It's in a trading range now 65, but both the weekly and the monthly positive. It looks as though it wants to continue to go high. A little bit of a setback below the 50 line. I would say be careful in all of these markets because the sentiment and the perception is one thing that you want to watch very, very carefully on all of these markets. Hey, I'm Adam Hewison. We've covered a lot of ground today, but be sure to be careful, be diligent, and be very focused. And if you're not in the market, I would say take the rest of the year off. Just enjoy yourselves, enjoy the season, and we'll come back and get them in 2016. Have a great trading day, everyone.